Hello and welcome everyone to the very best session of this event. If you're expecting a run-of-the-mill panel, then this is not for you. If you're looking for entertainment, some great insight and some healthy debate, then get comfortable and grab a drink of your choice. It's only 9 a.m. here in Singapore, so for me that's a coffee. That might not be the same for you and maybe not for all of the people on this panel. But we're joined by 4 of the most opinionated people in fintech, and we're giving them a soapbox to rant away for the next 40 minutes.
That's right. We've asked 4 panelists to think really long and hard about the most annoying things about our industry. So one of our panelists, Aman, found it very, very difficult, whereas Prajit had literally a whole book full of annoying things that about the fintech sector. So it's all about the terminology, a trend or a fad that we all kind of get swept up in, but has zero value. And these panelists are going to get the chance to rip apart some of these fads live on this virtual stage.
And we've turned this into a competition. So we'll be asking the panel to debate each topic before we decide and crown on the winner. So let's introduce you to these rowdy contestants. Up first is the feisty Jennifer, a serial banker who as a child wanted to be a racing car driver and harboured hopes of winning Formula One. In her spare time, Jen works at Standard Chartered. Welcome to the battle, Jen.
Hi, thanks, guys.
Next up is Prajit. What can I say about Prajit? He's never short of a word or 100, and he's the only person I know that made a bottle of gin last the whole of lockdown. Have you still got that bottle, Praj?
Yes,
I bet you
empty
have.
one though.
So as most people know, and you've been on a number of sessions with us over the last year or so, that you wanted to be an astronaut as a child. And so hopefully you'll be able to reach for the stars with your business, NIUM, and take it to new heights and hopefully outer space. So thanks for joining us, Praj.
Thank you.
Our third victim is a banker turned startup founder turned Googler. As a child, Aman dared to dream and always wanted to be an accountant. I think you're the first person out of over 100 speakers that I've spoken to this year that wanted to be an accountant. So thanks for your honesty. I hope you can bring some of that creative flair to this session today, and welcome to the show, Aman.
Thank you. Thanks.
Do you still want to be an accountant, Aman? Just a quick question.
Pat, as you know, I wanted to be my dad. My dad was an accountant, and my dad didn't want me to be one, so everybody's happy.
Fair play. Okay, last but not least, we have a seasoned professional on the badminton courts, having played at a very high standard in India. I think there's still time, Navin, to make it. So, and you've also been challenged by Prajit to play. So, Praj, I think my money's on Navin beating you because I know you're a little bit competitive, a little bit, just a wee bit. And so, in his spare time, Navin is the founder of Percipient, and I hope you brought your A game to the table, Navin. Thanks for joining us.
So to recap, oh yeah, you're on mute. But
sorry,
thanks,
Pat. Thanks, Becca.
Cool. To recap, each speaker will pitch the fintech term or concept that is their absolute pet hate. They'll then have to defend their point of view against the rest of the panel, and then we'll decide on a winner. So for example, if I were to play this game, I would put forward the term tech fin, which supposedly Jack Ma coined a few years ago and put it in a speech somewhere. It was picked up all over the place. Suddenly everyone's a tech fin, not a fintech. They're basically the same thing. There's no difference.
And so if I was playing the role of the panel, I would have to debate this and provide a counter argument. So I would say, who are we to argue against Jack Ma, one of the leading minds in kind of innovation and financial services? And so we are mere mortals in comparison to someone like a Jack Ma.
And then it would be my job to defend my point of view, which I think you made pretty easy there. If we all were, held up accountable to every single word we said, I think we'd all be in trouble on this call. And quite clearly, Ant Financial has ditched that term now that they're Ant Technology Group. So they've ditched that reference to fintech anyway. So I'm pretty sure I won that battle.
To be fair, let's meet in the middle and say I won. I think there's a clear winner there.
All right. If everyone's clear on the format, I think we're ready to get started. Pat, take us away.
So first up, contestant number 1 or victim number 1 is Praj. And so can you share, I'm going to say one line about your business and then move on to pitch your fintech fad. And so pitch it like it's hot.
Perfect. Thanks, Pat. Thanks, Becca. NIUM is a financial services plug. So you plug us in and you can access 40 different countries to build any kind of financial services product. The fintech fad I have picked up is buy now, pay later. And I believe buy now, pay later is going to create the same issue like the global financial crisis in 2007, 2008. So it's like the collateralized debt obligation issue which we have. So what is buy now, pay later? It is basically giving credit to people who can't repay. And let's look at it, right? That's what happened in 2007, 2008. It just burst on our face. So right now, what buy now, pay later does is basically enable or provide credit to people who don't have a credit card. Hey, you're not credit worthy. That's why you don't have a credit card. Right? Isn't that simple? Or it's giving it to people who are like students, really the younger generation who's just starting off, and they are allowing you to buy things which you don't need, right? And you can split it across 3 different months and pay it without an interest rate. Hey, you don't need that product. And I think what COVID has taught us is that you don't need half your wardrobe. You don't need half your shoes. You don't need half your equipment. That's all of these things. Right? So now if you think about it, the most important thing which is happening right now is about $50 billion is the GME which is being spent by people who cannot repay it. This $50 billion over the next 10 years is going to be $1 trillion. And what's going to happen? These guys can't pay. Today, if you look at it, if you look at the US specifically, most of the students are the one under the education trap where they pick up an expensive education and they can't pay it back. Tomorrow, your trap is going to be about the Gucci bag which you bought, about the most expensive holiday you took, which you couldn't afford, and things like that. I think COVID has been a great leveler for everyone. Spending out of your means you're going to hit a debt trap. So buy now, pay later, it makes you hit that debt trap. So I think it's a fad, and the banks have been doing it for years now. So let's give you a personal example. Most of us turned bakers during the lockdown. I as well turned baker. So now my kitchen is full of KitchenAid things which I don't need and I don't know how to use. But my bank gave me an option to split the transaction into 12 different zero interest free payments. And I did that. Well, why shouldn't I, right? But I'm a credit worthy guy. I have a credit card. So it makes sense to do that. So that's why I think that it's a product which banks have been doing for a long time. People who don't have a credit card shouldn't be given credit. And let's not create a debt problem for young kids.
Wow. Okay. Before we debate this, I just want to see if everyone needs half of the things in their wardrobe. Jen, you looked disgusted.
Obviously you do. Don't be ridiculous.
Okay.
Yeah.
Who would like
for all
to-
the Zoom calls. For all the Zoom calls to wear.
Nice. So who would like to start the debate here? Does everyone agree or?
So I've got a question, Pat, for Prajit. So firstly, congratulations on NIUM and all the success. I think buy now, pay later is the only thing you guys don't do these days, right? So just clarifying that. But the other question I had is, when you refer CDOs, and CDOs were created by, the junk bond king, allegedly, Drexel Burnham Lambert. It was incredibly complicated in terms of underwriting. From what I understand about buy now, pay later, the underwriting is actually woefully simple, and actually maybe that's the worry. So is that a fair comparison with the CDOs?
I think my analogy to CDO was nothing but about subprime people being given a loan, which they shouldn't have been, right? I think the analogy I'm drawing is don't give credit to people who can't pay it back, because that's when the crisis starts. And that's the intention of buy now, pay later, where they're not giving it to you or any of us. They're giving it to a young 18 to 19-year-old guy doing his first job. And they're saying, hey, why don't you buy this Gucci bag and pay it over 3 months? 1 month later, he's saying, I can't afford to pay this back. Then what happens, right? And it's a very tricky debt situation. And to be honest, what COVID has taught us is the lesser debt, the better it is for us.
I think that's quite a favourable comparison there, Praj. You just told us that you've been using this model over lockdown. Are you referring to yourself as an 18-year-old with a Gucci handbag? Navin, you seem to be shaking your head during that spiel from Praj. What do you have to say about this?
Yeah. I mean, I'd probably take a slightly different question for Praj. That, isn't there a built-in mechanism for the credit performance of the borrower into a BNPL? So there is a disincentive that if you don't pay, you will stop getting credit in the future. So that's one side of it. The other is, in a world where consumption has gone down, innovation has to find its way out. And if this is one such that drives more purchase so that there are more jobs created at the back of the kitchenette that you bought, I mean, it's fair play. I would say in both cases, it's quite good. It's not bad.
Right. So let's spin this a question around to you, right? Like you have a 20-year-old kid, and kid comes to you and say, "Hey, Dad, I want to buy this TV, right? Which he doesn't need, with like 5,000, like 5K HDS, but I can split it into 3 transactions." So what do you tell him? Do you tell your 20-year-old guy who's just started working? No, correct?
Yeah,
exactly.
no.
So that's exactly the point, right? So there are a lot of parents who would say that they don't care. You go do whatever you want to do. Suddenly, your son has bought a TV which he loves. But does he really need it? I think, and I'm going back to my COVID examples, right? COVID has really taught us that half the things we always wanted are not required, right? Why do you need all of these things? And it's just the fact that teaching kids at a very early age to save money is more important than teaching kids to live beyond the means. What buy now, pay later does today is lets you live beyond your means. You go buy your latest headset, you go buy your latest phone, you go buy latest Gucci shoes, you go buy latest belts. You don't need that, right? You save that money.
But sorry, Jay, go ahead. Yeah.
I was going to say, but I think you're using pretty, I'd say, extreme examples of the Gucci handbag or the headphones at TV, right? What about the 20-year-old kid who maybe doesn't have financial support from his parents, who needs a laptop for university, or something actually practical? I mean, it's easy to say that we think that like 20-year-olds are wholly irresponsible. In fact, I know people my age who are wholly irresponsible with money, but what if it's for the greater good, right? You also made the point around credit cards, right? A lot of the time banks, won't actually give those to people. To your point, maybe they have stricter things. And there you can't create then a credit history. So this is one way to create at least a credit history at a younger age, hopefully for practical purchases, and not your TV or maybe your game station or whatever the hell it is.
So the interesting comment I want to make is buy now, pay laters are not very regulated companies. So basically they can't charge an interest. They don't have a lending license in markets. So in fact, even if you default, they can charge your credit card, but in reality, your credit rating doesn't have an impact because they are not licensed, regulated to give that. So one of the reasons they can't charge you an interest is because they are not a regulator. They just split the payment into 3. So credit rating, etc. And trust me, most of the time when you're splitting a transaction, let's take a punt, right? Less than 10% of the time, and this is a punt number, right? So don't ask me for data or statistics I don't have. Less than 10% of the time, you are actually buying something which you need, splitting the transaction. 90% of the time, like if I at the checkout did not have that split into 12 months, I may have not bought it. But this is a bank. I know this is somebody who I work with, I work closely with, I can easily manage, right?
I have
18-year-old guy.
Nice use of made-up stats, Brad.
Yeah. Can I just clarify? So Citibank just offered, made an announcement, if I'm not mistaken, about buy now, pay later with Amazon. So you don't have a problem with that?
No, I don't have a problem. I have a problem with startups who are actually coming up with the whole concept of buy now, pay later, especially targeted at non-credit card holders, non-credit worthy people. My issue is not people like us who are credit worthy. Like, okay, I'm a startup founder, so borderline, but I'm talking about an 18-year-old guy who doesn't have a credit card. He is a 22-year-old guy who's in first job making a few $1,000s a month. So you're offering him to buy things which are way beyond his means, which is incorrect. So if even Citi is doing it to a very younger population, hey, listen, Citi refuses credit card to me. So, so basically they're definitely not giving a 22-year-old a credit card, right? So at that age, that's where my concern is, because 18 to 24 is an age where you need to learn to save. You need to basically learn to figure out your financial planning. And at that time, you're going to create a debt. And come on, like all of us, I principally agree that education is a big debt trap at that age. Everyone agrees? Hands up in the air, right? Okay. Why do you want to add your shopping to the debt trap as well?
All right, we're nearly up with time on this one, but I want to turn to the former Citi banker on the call. Navin, do you have any final words before we move on to the next fintech fad?
Yeah, I mean, I think it should be permitted to grow, BNPL, as I agree with Jen that, it brings in credit record, credit history.
I mean,
whatsoever.
you're agreeing without a reason, right? So throw a punch at me, saying that why this is bad. You're saying, oh, this should grow, right? But a plant should grow. BNPL shouldn't grow.
But I'm not
Maybe
saying
it's
it's bad.
Prajit's
I'm
wife
saying
to
it's
give him
good.
a punch.
I'm saying it's good. I'm saying let it happen. I said that it allows people there's a built-in mechanism to build a credit history, and then there is also an opportunity to create demand at the back of it, which is something that the world is suffering from a lack of.
So
right
you're
now.
the banker behind the GFC of 2008. So you're the one who said, let's give the subprime guys loan.
Okay.
Right? Let the industry grow.
All right, Brad, we're going to cut you there before you go down that rabbit hole. All right, on to our next fintech fad. Jen, I think you're up next. Take us away with your fintech fad. Pitch away, and then we'll debate.
Right. Okay. So my fintech fad, it's not strictly like a COVID-related one, but honest to God, it bothers me so much. So it is the expression digital transformation. I cannot even say it without using inverted commas in the air, right? It's like, one of those words that you say so much that it just loses all meaning in your head, or maybe that just kind of happens to me. But I think what it does is it actually takes away from the intent of the phrase, or the intent of what digital transformation programs are meant to do. See, I just did it again. And if you break it down into what it actually means, right? So the transformation piece, transformation technically means to transform, to change. It's like a one-off, right? It's like a dodgy 90s, makeover TV program that I never watched. Or if you look at the word digital, the technical term, or in what we mean is the use of computer technology, right? But what that does is it doesn't actually, basically what it turns them into are tech execution programs, right? It doesn't actually focus at all on the people or the culture, right? And for me, without the people, without the culture, you're missing the core components of being able to actually deliver the business strategy. And that's what it is. A digital transformation program is a business strategy, let's be clear, right? So if I give some examples of where perhaps this hasn't worked so well. So if you look, I'm going way back, if you look at the Titanic, Enron, right? They, at the time, arguably, or even Lehman's, arguably had the most cutting edge technology of their time in their industry. It didn't stop their own timely demise. And arguably, actually, for some of them, it added to it, right? So I think what we really need to do is kind of take a step back. It's not to say that digital transformation programs are not valuable. They are. We absolutely need to look at the digital, the technology piece. We need to ensure we're using, I won't even say the most cutting edge technology, because let's face it, basic can sometimes work, but the right technology. We need to look at the transformation piece, or as I prefer to say, the evolutionary piece, because I think transformation is a bit dramatic. But we need to ensure that that is completely underpinned with a laser-like focus on the people and on the cultural changes that these businesses need to undergo. Because I think if we don't, we're going to be having the self-same argument by the time I come to retire. And unfortunately for me and for you, that's quite a while away.
So it's digital transformation lipstick on a pig. Aman, what do you have to say?
I spent 15 years transforming stuff at Standard Chartered before I hung up my boots there.
Your fault.
We actually did do transformation, but we put the label afterwards rather than before, right? So I think the problem that you're referring to is people announce the transformation program before they've actually done anything with it. My question for you is, how's it going since in the last couple of years for you guys?
No. Look, I think, yeah. I mean, well, we're working together for starters, so clearly we're cool and cutting edge. No, I mean, it goes well. That's why the transformation, the focus part. Actually, what we're focusing on now is the culture, is the people element of it, is future ways of working, is how we work, right? And I think that wasn't necessarily as focused on because everybody was so focused on the technology. Now it's worked. We have, some good products, some good delivery that we've come out with. But the people part, to be frank, like most banks, it's not where we feel it should be. I don't think it's completely future ready. Not far, but not completely future ready.
So I have two questions. One, I'm a bit confused. Do you have an issue with digital transformation as a word or as a process?
Both, right?
Okay.
I think.
So let's assume you work in a large financial conglomerate bank. What is the most ideal digital transformation word replacement would you use? So, okay, let's not call it digital transformation. Change, okay, don't say change management. Change management is 90s. I suddenly feel very, like, what's the word you'll use to replace digital transformation?
I mean, to me, it's either like a digital strategy or digital evolution. I mean, it doesn't have to be complex. It doesn't have to be fancy. Just like, as it says on the tin, let's call it what it is. I just think the word transformation is just dramatic and it's not reflective of what we actually mean. It's not a one-off stuff.
Prajit's point that I guess that people are struggling with the term, right? In fact, you could argue you have to put digital on it, right? I mean, at Prajit's company, nothing's not digital, right? I mean, I get that at Standard Chartered it may be, but like, yeah.
Well, we're not. So nothing is totally digital either, right? But you need people to be digitally fluent as well. They need to understand what this means, right?
And my second question, sorry, let me finish this one before you jump in. And the second question is, one of the reasons why people are not at center of digital transformation because it's digital transformation, right? That's mean you are trying to get rid of 10,000 people.
Who's executing it though? Who's executing it? People are executing it. So unless people
the idea is to reduce cost,
what you're doing, then.
See, idea for transformation is what? Reduce cost, improve experience, create long-term vision and planning, right? That leads to 10,000 people job losses. So if you start, say, focusing, people, culture, etc., and trust me, people find it very difficult to let go of people, right? So suddenly when you want to fire people...
I'm not saying start with it. I'm saying it needs to be core to it. It has to be part of it. It can't be an afterthought or a side or run apart. It has to be part of the strategy. It can't be separate and it can't be after.
When it comes to firing people, Navin, before I say, this is my philosophy. When it comes to firing people, suddenly from capitalist people become socialist. Even the guy you hate, you don't want to fire, right? Navin, over to you.
Yeah, no, I'm going to be blasphemous here. So Jen, bear with me. I think the bank CEOs are the problem. And the reason I say that is, I mean, back in my corporate life, I used to run Asia for a big global bank. Mm-hmm. And whenever the technology guy would come and talk to me in our monthly management meetings, that would be the guy who would spend the least amount of time with me. And, I would want the sales guys to come in, I would want the collections guys to come in, but not the tech guy. In the 5 years that I have left that world and I have come to this side, the brighter side, I call it, I have concluded that the CEO is part of the problem. Now, what control do you have? You're 2-3 steps below the CEO to make a difference to digital transformation because he doesn't get it. He's been 35 years working. The world's moved past him by. And, he thinks that putting a mobile app is digital. And it's not. And, then McKinsey and Deloitte and all these guys will come and make some nice presentations. But the guy doesn't get it. And, I started by saying I'm being blasphemous. Now, how do you defend that?
Well, firstly, I have to defend it clearly because this is live recorded and it's bonus decision time. So, I think that may have been true a couple of years ago. It was definitely difficult. I think when you can put numbers around what it looks like, and I would say the cost of not doing something, that's the lens that people are taking now. So if I don't do anything, if I stand still, what are my competitors going to do? And I would say it's not just a banking issue. I mean industry-wide. I don't mean just banks, insurance companies, any of the big corporates that kind of out there. I don't mean digital transformation just for banks. I mean generally. But if you look at it from if I stand still, if I don't do this, if I don't embrace these changes, what happens to my business? And you can put numbers against that now. That wakes people up to the importance of these programs. So I think in the past, that could be true. You're absolutely right. CEOs were perhaps too slow at moving. But now you look at any of the investor discussions that happen. Everybody's asking about what your digital program is. Everybody's asking how you're changing. Everybody's asking about the style of your workforce and what you have planned. It's not just about, ROTE. Okay, yeah, that's still super important. Yeah. But it's not the only questions asked anymore.
Yeah, recently, there was a bank.
I think the truly blasphemous thing that Navin said is he assumed that the CEO was a man. Right? And as
I was going to jump in and say, but
there's now a woman in charge, and so maybe things will be different.
Oh, nice.
Oh, okay.
We're coming to time. Unless there's one quick one-liner, Navin or Praj or...
My one quick liner, if you want to hear from Jane Fraser, join us at the Singapore Fintech Festival.
Nice.
That was not a setup, by the way.
And very nicely done.
Nice.
Okay. I think what just my last liner is that the fact that digital transformation will always be a topic, and I don't think people can be at the front end of it, because in the end, the impact is of people and their jobs. So if you start thinking of jobs first, you'll never be able to deliver what the shareholder needs.
How does he get the last word in my session? I don't know how that works.
Hey, you can respond. You can have a one-liner there, and then we'll move on.
I don't mean getting rid of people. I mean changing their mindset and having them reskill so that they can move along with the transformation journeys.
Okay. Cool. So, contestant victim number 3, Navin. So, give us a one line on your business and the fintech fad that everyone else is going to rip apart, hopefully.
Okay, go for it. So hi everyone. My name is Navin, and I run a startup called Percipient. We're a bunch of ex-bankers, and we just launched what we call the world's first digital twin for banks that enables them to go fully digital without modernizing legacy first. So it's quite cool.
Is that part of transformation?
Let me start by saying
Digital
that I decided... Yes. Okay. And so let me start by saying that, I decided to speak about an opposite of a fad and pick an item that, in my opinion, given the urgency for all banks to digitally transform, they should have taken advantage of COVID and let decades-old, deeply malignant steps in the innovation and digitalization process go. And I'm talking about the damn POC. The POC, in my opinion, should be dead. POCs historically have had only one master, which is the financial institutions. And in my view, a POC to fintechs is as or more deadly, I think, as COVID is now to humans. And it's just that the world doesn't keep a track of how many fintechs disappear just waiting at the door of financial institutions to start a POC or to get paid for it if it gets actually started. And it's ironic that while the POC itself has created so many new jobs at financial institutions around the world, on the fintech side, it has more often than not but killed fintechs and hence jobs that were there inside those fintechs. So in my opinion, the innovation teams at financial institutions do not realize they owe their very existence to fintechs or innovators, but instead they often make it seem like they're doing a favor to those fintechs by giving them an opportunity to showcase their products. And I want to substantiate my argument. And I'm the first guy who's using data, and I hope, Aman, you're not using any. So let's get real with some publicly available data. Now, this is a major global bank's innovation team recently very proudly published the following statistics that inadvertently also show the odds for a fintech to secure just one POC, not a pilot, not a production order, just one POC. So they say they looked at 3,500 fintechs globally. Awesome, full marks. Then they go on to share that 140 out of those 3,500 fintechs reached what they call screening stage. That's 1 in every 25 reached screening stage. 10 of the 3,500 reached the finals. That is 1 in every 350. And if we say that ultimately, say 3 of the 10 get selected for a POC, that's 3 out of 3,500 get to do a POC. That's 1 in 1,166. That's pathetic. And from a fintech's point of view, I think they are innovating. They are helping the bank get better. They are trying to solve a problem which they may have identified. For example, we ourselves know digital is a problem for banks, and we've attempted to solve it. And that's an issue. So I would like to say that the fad that has been malignantly existent and not been taken out of the financial services jargon and processes and ecosystem is the word POC. So I'll stop at that.
So I just wanted to jump in congratulate you on using the word substantiate. That's awesome. I have a lot of sympathy for you, Navin, on POCs, having done the fintech route for a couple of years and not had the courage to stick with it like you and Praj. But like, you go to the banks and they just drive you nuts, and they're holding you by the proverbial. The problem I see here is that if we didn't have POCs, I don't think banks would actually do anything. And so would you even be in business if you didn't have somebody who was, took you through the rounds and said, okay, you get 1 or 2 POCs and you have to pitch too much for them. But like, you and I sat across on a discussion. The only way I could get that organization to consider working with you, and unfortunately didn't, right? But their loss, but was to get them to think about a POC. So how do people who are championing digital transformation like Jennifer, get you to the table?
I would love to answer that question, Aman. So a POC typically takes 15 to 18 meetings over 9 to 12 months to materialize, generally speaking. I would encourage Jen to say that I will get the POC done within 30 days from start. That's one. So can you shorten the time it takes to start something? Second, can you pay me for it? Don't tell me that you are getting Standard Chartered Bank as a client.
But aren't you being pompous as an ex-banker saying that all POCs are free?
No, POCs should not be.
You never said that pre-POC shouldn't be around. You said POC shouldn't be around. So aren't you being pompous?
No. POCs, because of the time they take, Praj, and that they don't get paid, is a problem that needs to be solved with the POC. So, Aman, I would agree with you.
Let's reverse this, right? I am a founder of a AI.
I'd like to congratulate Prajit for the word competence as well.
So cutting edge machine learning, the best transaction monitoring platform ever in the world. You're the head of technology of the bank, right? And guess what? I don't have a customer. I have $1 million of funding, and I come to you as a head honcho of a large bank. Do you really think that you have the guts to sign off a startup to get access to full data? Absolutely no. What you will say is that, hey, do a proof of concept with this really small piece of data set. Let us see whether you get through the governance, the risk, and all of those things, and then I will get you into the live feed, right? Versus where you put your neck on the job, right? And mostly it will be cut because it's a startup, right? No clients and etc. Like, how do you kind of manage a situation like that? Basically, the answer to that is Aman.
What they say is back test this. That's the next thing, right? Back test this.
Yeah. So they will just say that, sorry, we can't take you. Come to us when you have 10 customers. Listen, I've been there, right? So,
I can't believe I'm saying this, but I actually agree with Praj. So I think the challenge is that there needs to be some sort of like balancing act. So like to that point, that's an extreme example, a really, really small startup. And you're absolutely right. We have risk policies. Our job is to also make sure the data of our customers is safe, right? That's a great example. So we're not going to just go all in on a company that isn't proven. But I do agree that it's taken to an extreme, right? It's taken to a complete extreme. And I agree. I've seen it myself in other institutions, I have to say that, where, we've gotten to the end of a POC, and I use POC like this too, because I don't even think the concept is proven. You're proving whether it's valuable and whether it actually works, right? Because it's not a concept at the stage it's brought to the bank. And you're nearly getting to the end, and the company is getting squeezed for money. We're negotiating a contract with our raft of lawyers, and they don't have access to those things. And they do get to the end, and they're like, well, we're nearly tapped out. So if this doesn't work, we put all our eggs in one basket with you. So, Navin, I disagree with what you said about people on the other side of banks. I'm very aware and have been very aware of the impact it has on the startups that I talk to and the fintechs that I talk to, as much as I'm aware of the impact it has on the vendors, which is just the old word for fintechs, that we work with too, right? So I think it's unfair to say that we all think that way. We don't. Sometimes things do just take time, but I would also argue that actually startups, fintechs, vendors come to us and suggest proof of concepts to us. So who's the one that's driving it? The bank asking for the proof of concept, or the fintech coming and telling us they'll do one with us? There has to be a middle ground.
Those are great points, Jen, and I agree with most of them. I've been on the other side as well. I think I think what needs to get done is, if there is a proof of concept that's needed, let's go to pilot, right? And let's start much sooner than it normally takes. So we've done a survey, via the Apex platform. It takes 9 to 12 months for a POC to start. Now, a small company just can't survive that long. And if the odds of getting a POC are, 1 in 50 or 1 in 100, then you need to have those many opportunities created to actually even survive. So if you need to keep POCs, do them faster, pay for them.
Yeah.
Is it pilot the different word for POC? What is different than a pilot and a POC? Please.
Praj, you're not getting the final word on this one.
So
Navin, you get the final word on your own. Go on.
Pilot typically uses production data. POC uses mock data.
Okay.
Generally speaking, that's the difference between the two. Yeah.
All right, we're coming on to our last fintech fad with our Googler in the house. Take us away, Aman.
So I as Pat said, I really struggled with this, and then it just came to me, or Pat gave it to me. But the term unprecedented and coronavirus are definitely contenders for the word of the year. But I think if I think back at the decade, one of my real pet peeves, or the buzzword that really drives me nuts, is the word ecosystem or open ecosystem. And I don't have a problem with the word. I have the problem with the word way it is used. But to help you understand my problem with it, I'll just walk you through the history of it, what it means, and how is it being misused. So essentially, ecosystems came about in 1935, right? Like all good things, it found its basis in science. It was all about sort of living and non-living organisms operating together. Fast forward 58 years, 1993, James Moore, a strategist in HBR, introduced the term ecosystems as a business term, and it just sort of took off. Now, more recently, in the last 10 years, I think it's been completely misused. But before we talk about why it's been misused, let's talk about what it is. And I mean, very simply, if you think about an ecosystem is a bunch of providers, so content providers or providers of capability. And on the other side, it's a bunch of users who generally are free to come and go as they like. In the middle is the glue. The glue is essentially a platform, a device, or even data. And to make ecosystems work, there are 5 things you need to do. And we spend, obviously, at Google a lot of time thinking about ecosystems. The first is you got to have a strong developer community. You've got to have the ability to engage and connect people, a platform that is engaging and connecting. You've got to be able to establish a viable presence for businesses, not just your own, critically, but other businesses and companies to be able to succeed there. For startups like Navin's and Prajit's, and also for universities and the broader ecosystem. So that's what an ecosystem really looks like. There are ostensibly 2 types of ecosystems. There's the open ecosystem and the sort of walled garden ecosystem. But all of them sort of prescribe to these maxims. Now, the problem that I have with ecosystems, and the biggest culprits, if I may criticize the industry I serve into and belong to, is banks and telcos. There are others, but essentially the problem that I have is the following. There's no focus on the developers. There's no focus on engineers. Navin said, that engineers are really important. He didn't spend enough time with them. He's right. They don't still spend enough time with the engineers here. Secondly is the economics. The economics of most of these ecosystems are missing. The third thing around this is no to low engagement. So you create these ecosystems and they're like unloved gardens that are not tended to. And then nothing. They're not using data-driven models. They're not actually understanding what they're doing. They're not providing that data back to the consumer. Alibaba, for example, builds a fantastic ecosystem on e-commerce and provides data to people who are trying to sell every day. In financial services or telcos, very little, even though they sit on so much data. And lastly, there's no patience. These ecosystems are built with like a 1 or 2, maybe even a 3-year horizon, and before they even take off, they're blown up. And so the problem is that essentially these ecosystems are built by self-congratulatory, happy executives who sort of done a ribbon cutting ceremony on the back of a trip to Silicon Valley and visited a couple of companies. But what it's missing is it's filled with buzzwords. It's filled with buzzwords like BNPL. It's filled with lots of POCs. There's occasional references to digital transformation. But the problem is nobody's building real ecosystems. Thank you.
You're cheating now.
just
You
put
put
an application.
everyone's terms in, in with your own.
We just put an application to be part of the Google Pay ecosystem.
You are part of the Prajit. You are part of the Google Pay ecosystem.
I think being a startup, right, I vehemently agree. The concept of ecosystem is absolutely central tenet to what we have. Like being a startup, we can never build the FANG kind of distribution system, millions of customers, etc., etc., etc. Right? So, like for example, Paytm 3 days back launched their Apple Store, where you can, if you're a small app, you can actually surface app to their millions of customers. That's an ecosystem play. Like I have 1 million customers today across the globe, but if I want to access 100 million, 200 million, 300 million, I have to go to the Lazadas here. I have to go to the Amazon, and they are part of the ecosystem, and they take us as part of the ecosystem because we are actually going to add some value to the customer. So I think you may define, put new terms, etc., but ecosystem is very important. And let's look at a startup's concept, right? For me, ecosystem is the regulator, is the venture capitalist, is my exit opportunity, is my partner, is my technology provider, is AWS. I think ecosystem as a composite word is the most critical thing which keeps startups alive. Otherwise, if there's no ecosystem, we won't survive.
Yeah. So thank you. I totally agree with you. And I think the point I don't, and I don't want to make the mistake Jen did, but digital transformation. I don't have a problem with the ecosystem, right? I think that ecosystems are fantastic. The problem I have with people who misuse the word ecosystem and actually build essentially a point-to-point capability where they take people like you guys, Prajit and Navin, plug you into this thing and do nothing with you, and you wither on the vine. That's the problem.
Yeah, I think Aman, the thing that banks, at least, and insurers, let's say financial services industry, need to start to think differently is stop thinking like banks and stop thinking like insurers and try to see what are all the parts that my customer touches. And if I were to think as a technology company and I have to just stitch all of this up together, not think bank, they have to remind them. So they need posters saying, I'm not a bank, and remind themselves, and then create these streams to build ecosystems around products that they have. So if you've got a mortgage, which is a product, but will you go to the guy who paints the house? Will you go to the guy, the broker? Will you go to the guy who can bring furniture into the house? Will you, and then look at it that, let's look at the life, a day in the life of a human when I'm thinking house, and then build that ecosystem and then deliver it via their bank. They are in the best position to do it.
Final words, Aman. Go on, wrap up with that.
I think it's having the humility to know when you're the right person to create the ecosystem or plug into an ecosystem, right? I'll end with at Standard Chartered a long time ago in Kenya, we saw this company called M-Pesa develop, and we wanted to build that. But we had the foresight to say, we're never going to be able to build that. We're going to plug into M-Pesa, and it was one of the first banks to do that. So I think that is a smart use of ecosystem. I don't see enough of that, though.
Yeah,
that was a good mic drop to end on there. I think we have a unanimous decision, Pat. Am I right in saying that? In who the winner might be?
Yes, we do. Yes, and it's not based on your particular fintech fad. It's more for the one-liners and quips on the other fintech fad. So Aman, take a bow. Stand up and take a bow, and a virtual round of applause. Well done, Aman.
Thank you, Pat. I didn't want to show my pajamas.
Yeah, a lunch with myself and Becca coming next week.
The thoughtful humor is back.
Navin, you might have had stats, but Aman, we had a full history lesson from you. So thank you very much. Thanks to all the panelists. And if you want to hear more from these angry people, join us at the Singapore FinTech Festival in December. See you soon, guys.
Yeah.
Bye, guys.
Bye.
Congratulations, Aman.
Thank you.